What's up, everybody? Thank you for tuning in to another episode of the CPA Zone, the podcast where we discuss tax strategies and accounting tips for entrepreneurs and real estate investors. My name is Ryan Pulis, and our company, the Pulis Group, offers tax planning and advisory services for entrepreneurs like you. Whether it's bookkeeping, tax planning, or CFO services that you're looking for, we've got you covered. What's up, everybody? Welcome to another episode of the CPA Zone. I'm your host, Ryan Pulis, and today we're going to talk about why accurate tax returns and financial statements are critical when it comes to selling your business. Whether you're a real estate investor to exit a portfolio or a small business owner planning for a payday because you're about to retire, it's important to have clean books and accurate tax returns when you're planning to sell. So this topic actually came up during a meeting with a potential new client. They were starting the process of selling their business, and their broker suggested they reach out for assistance with getting their books in order. They had a nice little successful company. They also owned the building that they operated the business from, but their books were a disaster. Flat out told them, we're not going to be able to sell your business for anything near what you'd like to get out of it until you get your financial statements fixed. So they never used professional help. They were doing the books themselves. We're going to have a cleanup for the current year and prior 2 years, and it looks like there may also be a need to amend the prior 2 tax returns. So I come across situations like this fairly regularly and thought it'd be a good podcast episode. So let's dive in. So your financial statements and tax returns are going to be among the first things buyers want to look at and scrutinize when it comes time to sell your business. So most businesses are going to sell based on some multiple of EBITDA, that's earnings before interest, taxes, depreciation, and amortization, or a multiple of gross revenues, more common in fields like professional services, or if you're talking commercial real estate or apartment buildings, we're going to be looking at net operating income. Inaccurate financial statements create doubt. Doubt kills deals, or at a minimum leads to a very heavy discount. So let's start by talking about tax returns specifically. So they're not just for the IRS. Buyers and their CPAs, their brokers, their legal counsel, they're going to pull 2 or more years worth of tax returns so they can verify reported income. So your books and taxes should match. If they don't, you should be able to easily explain the differences. Maybe your books are kept on an accrual basis, but your tax return is filed on a cash basis. There's going to be a reconciliation there that your CPA will have, and you could easily prove that to a potential buyer. They're going to also cross-check net income with the books versus tax return. There's typically adjustments that book the tax differences, but you should be able to easily prove that or use your CPA to help prove that and reconcile the books to your tax returns. They're also going to look for any red flags, like are there a bunch of personal expenses running through your business? Remember, you want to keep business and personal separate. They're going to confirm your employees and contractors are properly classified. A buyer does not want to buy potential liabilities, especially if you're talking about a stock sale over an asset sale. In neither case do they want to inherit any issues. But with a stock sale, the liabilities continue from one owner to the next. They're also going to want to see consistency with what you say you make and what you've actually filed. So again, your book income should be pretty close to what's on your tax return. If there's big discrepancies, that's going to send buyers running away. They're going to be scared. They're not going to trust what they see. And they're going to most likely pass on the deal. Or what they offer is not going to be anywhere near what you're hoping to get out of this sale. They're not going to include unreported income in their valuation calculation. If you've got a bunch of income that's not being reported on your tax return, that's going to be excluded from their valuation calculations. So if your numbers aren't accurate, the buyer is either going to leave or they're going to ask for some sort of holdback or discount on the purchase price because they're going to view it as more risky. So there was one time a few years ago working with a client. Our client was looking to acquire a book of business. And they asked us to look at the financials and the tax return. Well, the seller presented financial statements that looked much better than what was on their tax returns. And when we asked about the discrepancy, they said, well, we have a bunch of cash jobs. We don't report those for taxes. We just put them on our books. So they're basically keeping 2 sets of books, totally illegal, and filing taxes without the cash income. So that blew up the deal. The buyer did not want to inherit any potential liability. There's a lot of risk. They don't know if the seller is being honest. Were those cash jobs legitimate, or were they just kind of fudged into the books? So the buyer was not willing to include that unreported income in the valuation. The deal never went through. And it's far more difficult to verify unreported income. Is the seller being honest? Do those sales exist? No one's going to go out there and report to the IRS a large amount of income over what they truly earned and pay more taxes on it, not unless they're laundering money or something to that effect. But anyway, most buyers they want to buy a legitimate business. They want to buy from someone that's being honest and doing things correctly. So having your books in order is just going to really help make that process much easier. And if your books match, and your books need to match your tax return with any differences, there usually are some, they should be easily explained and reconciled. So your financial statements, really what they do is they tell a story about your business. So if the story doesn't make sense, a buyer is going to go somewhere else. The buyers want to see a clean P&L. They want balance sheets with reconciled accounts, not a bunch of plug numbers or owner loans that make no sense. They want accurate reports of AR and AP. They want to see consistency over the years. And that maybe that consistency is growth, which is great. But again, they're really looking at your financials to help get a good picture of the health of your company. If they see disorganized or inaccurate statements, they're going to assume more risk, and risk is going to lower your valuation. Now let's get to kind of the meat of it, where none of this works. You don't have good financials, and it's likely to have a accurate or very accurate tax return without good bookkeeping. Unless your business is very simple, not a large volume of transactions, then maybe it's possible. But as your business grows to a point where you're really doing well, you're kind of over that $1 million a year in revenue, you really need to have good bookkeeping in place. Good books are the foundation of accurate financial statements, which then in turn help with accurate tax filings. So you want real-time accuracy. So your books should be up to date and reconciled. You don't want to be scrambling to reconcile months or even worse, years of transactions when you get close to the point when you're ready to sell. It also helps with better decision making as you go. You can kind of spot issues and correct them early if you're on top of things. And when it comes to the sale process, you're going to see faster due diligence. When a buyer asks for records and you're ready and everything's clean and in good shape, that's going to help give the buyer confidence in you and your business and the business that they're buying. It also gives you better negotiating power. You don't want to have to worry about them digging too deep. You want them to dig in because you're confident that they're going to come away satisfied with what they find and really excited about buying your business. And if your books are a mess, it's going to delay the sale, invite deeper due diligence efforts from the buyer, might flat out just cause the deal to fall through. And again, cleanup work. So if you are in this position and then you have to go back and clean up prior years of books and possibly amend tax returns, the cleanup work for bookkeeping is not cheap. Typically going to cost at least the same, usually more than if you had just done it right along the way. And now you're paying for a bulk of work all at one time. So the big takeaway here is if you want to sell your business for a top price, or even call it a fair price, then start acting like you're selling it at least 2 years before you list it. Make sure everything's clean. Get your books and your bookkeeping tight, financial statements in good order. Everything's reconciled. And make sure you're working with a professional that knows how to advise on the most tax efficient exit strategy as well. That you can end up paying a boatload of taxes if you don't structure the deal properly when you sell. So you want to make sure you're working with a tax advisor that knows how to help you do just that. Clean financials don't just help you sell your business. They can really help make the difference between walking away with the price you were hoping for versus having a deal totally fall apart. Now, that about does it for today's episode. If you're thinking about selling your business or just want to make sure you're set up for success, go ahead and reach out to us at the Pulis Group. We love helping investors and business owners keep more of what they earn. If you found value in this episode, hit that like and subscribe button and leave a 5-star review. Also, share it with another investor or business owner that you care about. Until next time, Have a great day. One last thing before you go. We have put out a free ebook for our listeners. You can find a link to this in our show notes. It's called the Rental Real Estate Investor Tax Guide and covers all the basic tax-related information for real estate investors. We hope you like it. Again, go to the show notes to download your free copy. So that about does it for this episode of the CPA Zone. Thanks for listening, and I hope you found something valuable that you can take away. We are taking on new clients, and if you'd like to work with us, then go to our website and fill out the client intake form on our contact page. This can be found at thepulisgroup.com/contact. That's ThePulicegroup.com/contact.